Hi grade 10 student. So in today's video we are going to do analysis of transaction that you also know it as a accounting equation. So obviously we are going to deal with assets, equity and liability. So at the end of this video guys, you are going to learn how are you going to know that this account must be debited, this account must be credited. Very simple. Make sure that you watch until the end of this video so that you will learn. So this is the question paper that was written in 2023 around March in the province of Limpopo. So if you check under a grade 10 playlist, you will find other videos that I did for previous papers like 2022, 2021 and many other years. So okay, let's start with our question paper that we have. Okay, it was question 2 on this question paper and it was contained 35 marks. Okay, so number 1, they give us use the following information from the book of Mikateko Traders to analyze the given transaction according to the format provided in the answer book. Okay, then the first one, they give us example. They said that the owner took cash worth 400 from business bank account for her own use. So the answer book that has been provided guys is this one. Okay, so let's try to answer the example first. They give us example that the owner took cash from the bank account for her own use. Once the owner took something for personal use, we call it what? A drawings. Okay, and the drawings, we know very well that it fall under what? Equity. So this is the principle that you have to learn guys. You must know that when we are dealing with assets is always increase on the debit and decrease on the credit. Equity increase on the credit side and decrease this side. So liability is the same as equity. Okay, it's minus and plus this side. So this principle guys is very important because it's the one that is going to guide you. How are you going to debit? Which one are you going to credit? Okay, now the owner took a net worth. Equity is the same as net worth for his business, which means that equity is going down because something has been taken outside the business. With the owner took something which is cash from the business for her personal use, which means that the assets or the value of the equity is going down. Okay, which means that when we check our equity, it decreases what? On the debit side, which means that we are going to debit. Okay, example, we are going to do it here. It's going to be drawings. And what do we credit? He took cash. Cash is a bank. It's the same as bank, which means that bank is going down. Assets is decreasing on the credit side, which means that it's going to be bank. And the amount is going to be minus 400. So this sign is very important because now we know that bank we credit, which means that under assets, because bank fall under assets, we're just going to do what? To show the minus. Equity, because we debit, we're going to take the same side of minus. Liability is not affected in this case. Okay, then 2.1, received 1,000 from bank, a monthly interest on fixed deposit. Okay, the business received cash, which means that bank has increased the balance, which means that bank is on the plus now, assets increase. Okay, we're gonna have bank. Then what caused bank increase? What caused bank increase is because of interest, which means that we're gonna credit interest on fixed deposit. Very simple. Okay, the amount is 1,000. It's gonna be plus 1,000, and even our equity is gonna be 1,000. Equity, we record all income and expense. The difference is that under equity, if it's an income, we're gonna show a plus sign. expense, we're gonna show a minus sign. Very simple. Okay, then the following one, paid 15,400 equipment solution to purchase equipment using the banking app. Okay, the money goes out, assets is going to decrease, which means that the bank now is going to be a minus because we paid. Okay, we paid 15,400. okay, so we purchase equipment. Obvious, equipment is an asset, is going to increase, which means that on the same under assets, because equipment is an asset as well, we're gonna have another plus. It's a plus minus on the same account, and this two is not affected. It happened, guys, that transaction affect only assets, only equity, only liability. Simple. As long as another one is debited, another one is credit, and we don't just debit and we don't just credit. You first check money goes out, bank, that's why it's this side. When money goes out, equipment come in, we debit, it's a plus. Okay, then the third one, okay, the second one, yes, it's a third one, 2.3. Paid 2,400 to Mika traders in settlement of the business account after receiving 4% discount. Okay, we paid 2,400 to our creditors. How are we going to adjust this one? Obvious, our bank money goes out. How much goes out? 2,400. Okay, but we receive 4% discount, which means that we need to do what? To do a calculation. A 4% of amount that we owe. Okay, how do we know? A calculation goes in this way. Okay, let me show the calculation. We have 2,400 that we paid, but we receive a discount of 4%. 2,400 we multiply by, okay, we are looking for amount that we owe before we pay this amount. We're gonna say in this way, guys. Let me show here. 2,400 is the amount that we paid. Multiply by, we are looking for total before what? Discount. Then we say divide by 96. How did we get 96? Because this amount is 96%. Is after what? We subtracted 4% from 100. That's why we have 96. If you do this calculation, you are going to get liability of 2,500, which means that the difference between these two is going to be 100 rand. 100 rand is what? Is discount. This 100 rand is a discount. Okay, now let me go back to that question again. Yes, we paid 2,400. This is the money that goes out of our business. Okay, but the 4% of discount is going to be income to us because we didn't pay it. Okay, which means that in this case we're going to say discount received. Discount received. This one is our liabilities, a creditors control. Okay, I'm gonna expand it into more detail so that you can understand. Discount received, guys, is in income. It falls under what? Equity, which means that it's a plus. Okay, now 2,500 is going to be a minus because we pay, we no longer have what? Liability. We reduce liability on the debit side. That's why our creditors control has been debited. Okay, the following one, issued a credit note of 540 to S. Makua for goods returned by her. The cost price, it was 360. So in this journal, we are going to have 4 items because this company is using what we call perpetual. When we record sales, we must record what? A cost of sales at the same time. Okay, this account is going to be like this. On the first one, inventories come back because the customer is returned, which means that our asset is going to increase because trading stock come back. Our asset is increasing, and we debit what? We credit cost of sales. It's like we are returning cost of sales. Okay, and cost of sales amount they said is how much? It's 360. It's going to be 360 and 360. It's going to be plus because the cost of sales is a return in this case. Okay, it's like income. Okay, and another one, we're gonna have debtors allowance. Once customer returns something, guys, we must have a debtors allowance, which is equity, and debtors control. Debtors control, guys, is an asset. It's an asset. In other words, this person no longer owe this amount of 540. We have to subtract it under debtors control. It's like if you purchase a TV, guys, and you find something that you don't like under that TV and it's still within 7 days, you can return it and they're not going to charge you, which means that the debt must be subtracted. Debtors allowance must be adjusted as well. This account is not affected. Okay, this is how you should do it. So there's a lot of marks. 8 marks from only one transaction. Okay, 2.5 bought a trading stock from Kona supplier for 8,000. Okay, we bought a trading stock, is going to be debited because asset is increasing, and creditors control, liability increase. Okay, which means that we are going to say 8,000 a plus and 8,000 this side, liability increase because we purchased on credit. Okay, paid interest on loan with you at interest rate of 15%. For 4 months, amount of loan is 75,000. How do we calculate this interest? Multiply by 15%, and we also multiply by what? Okay, this is calculation, guys. Multiply by 4/12. This is how you do this calculation because they said only 4 months. It's 4 months out of 12 because this 15% is for 12 months. Okay, then it's gonna give you interest on loan, which is expense must be debited. Interest on loan, and the bank is going to decrease now because it's interest that we are paying. Okay, if you do this calculation, it's going to show you amount of 3,750. 3,750 is a minus. Money goes out of the business. Expense is always on the debit side. Okay, then the last one, the owner Team Miteko invested 40,000 directly into business account as her additional capital contribution. What do you think about this one? Think about it while I'm explaining this. Thank you so much, guys. If you have watched so far, please, if you haven't subscribed to this channel, it's free of charge. Make sure that you subscribe so that you can support us, so that we can record many videos that are going to assist you.